In this video, we're going to talk a little bit about Sofi, its price action, take a quick look at its options, and also we'll have a quick chat about its earnings. So looking at the daily price action, yesterday we had quite an indecisive price action candle here. It wicked up, it wicked down, it did close above the volume shelf slightly, but during the week, the action has been still in this range, so it's still respecting its range, which is annoying. Given the really good earnings, we were hoping that it was going to break out and test this pale blue line and at least get this turned into support, but instead, more of the same. During the week, we had some nice confluence here in the bull market band and the historical support. I'm still confident that's a relatively strong level to break below. We'll talk a little bit on why I think this candle here happened, but let's just check the rest of the charts. RSI still neutral, golden cross still expanding, whales still coming in, flow is flat, which isn't ideal given the earnings. But if we take a look at the weekly, it just looks even more indecisive. We're just wicking around everywhere. Nothing too much is happening. We're still range bound. RSI is neutral. The death cross does seem like it still wants to close, which is good. I'll take that. If that's all we're going to get out of these earnings, I'll be happy. Flow is improving a little bit on the weekly chart, but still not where I'd want it to be. I want it to be above this black line here. But the golden bar is still in play. Now, I did want to touch a little bit on earnings. I didn't want to go too much into the nitty gritty because I'm still going to do a post for my website at www.thecraftytrader.com. But mainly, I just wanted to talk about how price action was good. We had earnings, it was great. We had the call, it was still good. No dumb questions. We did initially launch at the market open, and then we hit this resistance, and this I think is where the bears wanted to double down. This stock does have an incredibly high short interest. I think going into this it was approaching 20%. That is very high. It would have needed quite a substantial trigger to get the squeeze action going. It looked like it didn't make that. But I think as prices come down here, the shorts have started to cover, which has allowed the price to come up a little bit. Other than that, though, I think price action for the most part has been muted today. PayPal did excellent. Their call was great. Everything was amazing. I think their earnings were better than SoFi. So in some degree, I think they've stole a little bit of their thunder. But I think the main factor here was the rest of the market was quite depressed yesterday. Now, I think the reason for that is because we've got the Fed rate decision later today. So I expect that we might get a little bit of a bounce in the morning at market open for most stocks, but that might continue to sell off into the close while we await the rate decision. But we'll have to wait and see. We do have some employment data out this morning, which might move the market a little bit. I prefer this ADP data. I find it a bit more accurate. So that's going to give us a better snapshot of how things are. But the Fed rate decision isn't till 7. Now, I'm not expecting any big shocks there regarding rates. Obviously, if they did cut, we probably would start to launch, but I don't think that's going to happen. I think the more important part is going to be this Fed press conference here at 7:30. So I don't think we're going to see too much action in the market hours. I think the action is going to come post-market, but it depends. Obviously, his opening remarks, how long they're going to be, and when the questions start, because questions tend to typically be where the chop happens. Is someone going to ask something stupid? Is it going to be a good question? So we don't really know how that's going to go. But my expectation is that normally someone asks something dumb. So we'll see. If we take a little look at the open options interest, we can see not a whole lot has changed. We've still got this really strong support at 7, which is also lining up nicely with the technical side of the chart, and $8 as the resistance. So range bound, I mean, it pretty much hit those levels during yesterday's market. We'll see what it does today, but I mean, I'm not expecting anything exciting. I do think SoFi is going to run when rates do get cut, because that's going to be really good for their loan book and I think credit card business and all that stuff. So I think for now, SoFi is still going to move with risk on assets. So when we have a risk on day, I think that's where we're going to see the pops in this one. We can have a quick look at next week. Looking a lot more bullish. So definitely worth keeping an eye on this. This $8 level is going to be just annoying to get through, I think. And then I think once it's over that, $10 is probably a relatively clean shot. Might be some sticking area at 9 as we've got quite a bit of historical resistance there as well, but not many people picking that as a strike. Then if we take a look out to Jan 2025, as we always do, we can see people get a bit more bullish on this one. $10 still the sticking range. I mean, that's probably where I would put it to get back to. I'd like to see it hit over $10 this year, but I think that's mainly going to depend on cuts. If we get cuts, then I think we're getting over $10 on this one. Jan 26, again, $10 strikes there, but they're going to be quite strong resistance levels when we get there, and then creeping up to 15. I did want to take a quick look at the numbers from earnings with you, though. Wall Street Engine from Twitter, X, whatever you want to call it, they always do really good earnings report breakdowns as well as Market Nerd, but for this one, I've just grabbed Wall Street Engines. So revenue up 20% year over year, amazing. Net income still profitable, amazing. Pretty impressive given the rest of the macro market. Adjusted EBITDA up 80% year over year, love it. Q3 guidance also got lifted for the most part in revenue. That was nice. That's quite a big jump. I wasn't expecting them to put it up that much. EPS as well, 0.04, so 4 cents basically. EBITDA, I think they came in about in line with what was estimated, so nothing too exciting there. Full year guidance there was much better. I really love it. So we're up on all revenue, adjusted EBITDA, net income, and EPS. Total products I really liked was up 39%, very impressive. And what else do we have that was exciting? New membership as well. I was very impressed. 41% growth year over year. They continue to steal market share, and I'm very excited to see where this goes, especially with all the new advertising stuff they're going to be doing as well. Overall, I think I think their earnings were really good. They just showed that they can just roll with the punches the market keeps throwing. Anthony Noto has been quite pessimistic on the market, but he's really managed to execute. The company has completely evolved during COVID and all that stuff. So to see them executing at this level is pretty impressive. I can't wait to see what they do when the market is favourable. Now, if we've got anyone out there that doesn't like just looking at lists of numbers, I also use visualstocks.com. It is a paid service and I'm not affiliated with them, but I do recommend using them if you work better with pictures rather than numbers. Members is up, products is up, Galileo accounts is up, revenue's up, net income is down, but they're still profitable, which is the trend is still our friend, and this is a relatively newly profitable company. So that's the main thing we want to watch out for. I'm not too concerned about this going up in a straight line. Nothing's ever going to be a straight line, so just bear that in mind. EBITDA good. Shares outstanding, they did get diluted a little bit, but we know what that was for. I do write about that on my website if you want to go check that out. And obviously cash down a little bit, but a lot of debt got eaten away. So that was good. That did cost a little bit of dilution, but nothing too concerning. Operating expenses up a little bit, but nothing concerning given their growth at the moment. Key charts as well. Revenue by segment looks good. In general, the trend is up for revenue. We like that. Profit by segment. It's nice to see more of the financial services revenue hitting the bottom line. Net deposits is down, but I'd like to see that get back up. That's probably the only number I'm not super happy with. Operating leverage continues to go the right way. Loan originations really good. It's nice to see them back rolling on this. Average loan balance good. FICO scores coming down a little bit, but not too much. Still pretty high scores. Still quite picky with who they're lending to. We've got charge-offs. This doesn't appear to be updated for this quarter yet, so we'll see. I think it was down. I can't remember. I only had a quick look through the earnings deck. Primarily yesterday, I was looking at PayPal because PayPal was my largest position, so that made sense. Student loans default rate not too much changing there. Total assets still grinding up, and then if we look over at estimates, still grinding up. The trend is still our friend. It's hard to see EPS here, so we'll quickly zoom in. Still profitable. Can't hit that. That's exactly what we want to see from this company now. I expect those numbers to improve as the quarters go on as well, and I think they'll be lifting guidance most earnings.